In a shocking turn of events, a Kentucky cryptocurrency investor has been arrested following the alleged torture and kidnapping of an Italian businessman in a luxury Manhattan apartment. The incident, which has drawn widespread attention for its brutal details, unfolded over several weeks, culminating in the victim's daring escape and subsequent rescue by police. John Woeltz, 37, stands accused of holding the 28-year-old victim captive in a Soho townhouse while attempting to extort millions of dollars in cryptocurrency. The ordeal began on May 6 when the victim arrived in New York City for what he believed was a business meeting with Woeltz, with whom he reportedly had prior dealings. Instead, he was met with violence. Woeltz allegedly seized the man's passport and bound him with electrical cords, initiating a campaign of torture that lasted for over 2 weeks. According to police sources, the victim endured horrific treatment, including electrocution, pistol whipping, and threats of dismemberment using an electric chainsaw. He was also forced to ingest cocaine and was subjected to psychological torture, being told he would never escape. The severity of the situation was underscored by the discovery of Polaroid photographs documenting the abuse intended for use in extortion, with images depicting the victim tied to a chair, a gun pointed at his head. The victim managed to escape on May 23, believing it was his last chance before a potential execution. He approached a nearby police officer, which prompted an immediate response from law enforcement. Upon arrival at the luxury apartment on Prince Street, authorities found the premises littered with evidence of the torment, including broken glass, night vision goggles, and a bulletproof vest alongside the Polaroids. Woeltz was taken into custody, appearing before a judge in a bathrobe and handcuffs, where he was charged with multiple offenses, including first-degree kidnapping, assault, and unlawful imprisonment. He was ordered held without bail, with his next court appearance scheduled for May 28. In addition to Woeltz, a 24-year-old woman named Beatrice Fulci was also arrested and charged with similar offenses, although details regarding her role remain unclear. Local residents expressed disbelief over the incident, reflecting on the previously quiet neighborhood. Eyewitnesses described the police response as chaotic, with SWAT teams and emergency vehicles swarming the area as the story unfolded. Kieran Tully, a nearby vendor, noted he had observed a constant stream of unfamiliar faces entering and exiting the townhouse, raising suspicions about the activities within. As the investigation continues, police are interviewing additional individuals connected to Woeltz, including 2 butlers believed to have been present during the captivity. The case not only highlights the dark underbelly of the cryptocurrency world, but also raises questions about the lengths individuals might go to in pursuit of wealth. This harrowing incident serves as a stark reminder of the potential dangers associated with cryptocurrency dealings, especially as the digital currency landscape continues to evolve. With the investigation still ongoing, further developments are anticipated as authorities seek to uncover the full extent of the alleged crimes committed within the walls of that opulent New York City apartment. The cryptocurrency landscape is currently experiencing a seismic shift, with Bitcoin recently reaching an unprecedented all-time high of $111,404. This surge, which has been accompanied by a notable increase in the value of Ripple's XRP, now trading around $2.65, signals a robust resurgence in the digital asset market. The driving forces behind this phenomenon include heightened institutional investment and increasing optimism regarding forthcoming regulatory frameworks in the United States. As investors seek new avenues for passive income, cloud mining has emerged as an attractive alternative to traditional mining methods, which often require significant capital investment in hardware and ongoing maintenance. One platform gaining attention in this realm is ZA Miner, which offers users the ability to mine cryptocurrencies like Bitcoin and Dogecoin without the burdens associated with hardware ownership. ZA Miner sets itself apart by providing a user-friendly interface and an enticing $100 free mining contract for newcomers, all while maintaining operations powered by renewable energy sources. Cloud mining operates on a straightforward premise: users rent computational power from remote data centers, allowing them to bypass the complexities of setting up and managing their own mining rigs. This model has gained traction particularly among individuals who may lack the technical expertise or resources to engage in conventional mining. ZA Miner capitalizes on this trend by offering flexible plans that cater to various investment levels, allowing users to start small and scale their mining activities as they gain confidence. In addition to its accessibility, ZA Miner promises reliable daily earnings, enabling users to realize profits without the need for intricate configurations. This predictable income stream is particularly appealing to those new to cryptocurrency as it simplifies the investment process. ZA Miner emphasizes transparency and security, with operations safeguarded by leading cybersecurity measures and a commitment to environmental sustainability. The platform's appeal is further enhanced by its referral program, which incentivizes users to bring new participants onto the platform, potentially earning up to $80,000 based on referral activity. As more individuals explore the potential of cloud mining through ZA Miner, the platform continues to gain traction, positioning itself as a leader in the industry since its establishment in 2020. The broader market's current bullish sentiment towards cryptocurrencies has not gone unnoticed by institutional players. Semler Scientific, a US-based medical tech firm, recently disclosed the acquisition of an additional $50 million worth of Bitcoin, bringing its total holdings to over 4,000 BTC. This strategic move underscores a growing trend among corporations to adopt Bitcoin as a treasury asset, reflecting a shift in institutional perception of cryptocurrency as a legitimate long-term investment. As the cryptocurrency market continues to evolve, analysts are closely monitoring Bitcoin's performance for further bullish signals. Prominent figures in the crypto space are eyeing critical resistance levels that could dictate the next phase of the market, with some projecting Bitcoin could reach between $116,000 and $128,000 in the near future. This optimism is fueled by recent developments, including increased regulatory clarity and high-profile endorsements from financial leaders. In conclusion, as cloud mining platforms like ZA Miner gain popularity and institutional interest in Bitcoin swells, the cryptocurrency market is poised for further growth. Investors are advised to remain vigilant and informed as the landscape continues to transform, paving the way for potential new opportunities in the digital asset space. With the ongoing developments in regulatory frameworks and institutional adoption, the future of cryptocurrency holds both challenges and exciting prospects for investors worldwide. In a spectacle that stirred both intrigue and controversy, former President Donald Trump hosted a lavish black tie gala for top purchasers of his meme coin $Trump at his Virginia golf club. The event, which drew around 220 attendees and was promoted as the most exclusive invitation in the world, featured Trump arriving via Marine One and speaking at a lectern adorned with the presidential seal. This backdrop raised eyebrows, especially as the White House maintained that it was a private event held during Trump's personal time. While the gala was meant to celebrate the cryptocurrency's enthusiastic supporters, it quickly became a focal point for criticism and scrutiny. Ethics experts expressed concerns over Trump potentially profiting from his presidency while providing access to his office for those willing to invest heavily in his digital currency. Reports suggest that since the launch of the $Trump coin in January, Trump's businesses have generated over $300 million in sales, with $43 million in transaction fees alone, raising ethical questions about the intersection of politics and business. Attendees had anticipated a night of networking and high-profile interactions, but were met with disappointment over the evening's culinary offerings. TikTok influencer Nicholas Pinto, who invested $300,000 in the meme coin for access to the event, described the food as the worst he had ever experienced at a Trump venue, likening it to something one might find on a budget airline. Other guests echoed his sentiments, remarking that the meal lacked quality and presentation, with some joking that they had seen better service elsewhere. The attendees, including notable figures such as former NBA star Lamar Odom and crypto industry influencers, left the event feeling underwhelmed as Trump's appearance was brief and he engaged little with the crowd. The event also attracted protesters outside the venue who criticized the perceived corruption associated with Trump's crypto ventures. Demonstrators including Senator Jeff Merkley, rallied against what they termed crypto corruption, highlighting growing concerns among lawmakers about the implications of Trump's financial activities in the digital currency space. This backdrop of dissent further complicated the political landscape, with lawmakers expressing worries that Trump's involvement in cryptocurrencies could derail ongoing discussions about regulatory frameworks for stablecoins. The aftermath of the gala saw the price of the dollar Trump coin plummet by 16%, reflecting market reactions to the event and the growing scrutiny surrounding it. Justin Sun, a prominent crypto mogul and the top holder of the token, praised Trump during the event but also highlighted the underlying instability of the cryptocurrency market, which has been marked by volatility and regulatory uncertainty. As discussions about the future of cryptocurrency legislation heat up, the implications of Trump's involvement in this sector cannot be understated. Critics argue that the former president's actions could set a precedent for future administrations, prompting calls for stricter regulations that would prevent elected officials from profiting from cryptocurrencies while in office. The discourse surrounding the dollar Trump coin and its associated events will likely continue to be a contentious topic as the political landscape evolves and as the cryptocurrency market seeks stability and legitimacy. Looking ahead, the intersection of cryptocurrency and politics promises to be a battleground for regulatory reform and ethical scrutiny. As lawmakers grapple with the implications of digital currencies, the outcome of these discussions could shape the future of financial regulation in the United States, particularly in how it intertwines with political power and influence. The ramifications of Trump's ventures into the cryptocurrency space will undoubtedly reverberate long after this gala, setting the stage for ongoing debates about the role of money and politics in America. As the cryptocurrency market continues to evolve, Ethereum, the second largest cryptocurrency by market capitalization, finds itself at a crossroads. Trading at around $2,550, the question on many investors' minds is whether now is the time to buy Ethereum, especially as it remains significantly below its all-time high of nearly $5,000 reached in late 2021. While Bitcoin has been stealing the spotlight with record-setting prices this year, Ethereum's recent performance indicates a potential resurgence that could make it a valuable addition to any portfolio. Ethereum's recent price trajectory has shown promise, with a notable surge of approximately 50% over the past month. This uptick is attributed to several compelling factors that suggest the cryptocurrency might be on the verge of a substantial rally. One of the most significant catalysts for this optimism is the successful implementation of the Pectra upgrade, which enhances staking and overall usability. Such improvements are critical as Ethereum strives to overcome long-standing scalability issues that have plagued its network, such as slow transaction speeds and high gas fees. Moreover, the regulatory landscape appears to be shifting in Ethereum's favor. The recent advancement of the Bipartisan Genius Act, which aims to establish a framework for stablecoins, could further bolster confidence in the Ethereum ecosystem. Given that Ethereum is the backbone for numerous decentralized finance DeFi projects and stablecoins, clearer regulations could provide a much-needed boost to its growth prospects. Investor sentiment also plays a crucial role in Ethereum's potential. According to blockchain analytics firm Santiment, the amount of Ethereum held on centralized exchanges has plummeted to an all-time low, with only 4.9% of the total supply currently available. This trend suggests that investors are opting to hold onto their assets rather than sell, a sign of confidence in Ethereum's future. Despite these positive indicators, skepticism remains. Standard Chartered recently revised its price forecast for Ethereum, projecting a target of $4,000 by the end of the year, which still represents a significant increase from its current value. While the bank cited ongoing scalability challenges and questioned Ethereum's fundamentals, it's essential to recognize the strong ecosystem that continues to thrive. More than half of the total locked value in the crypto space, approximately $60 billion, is still tied to Ethereum, underscoring its enduring relevance despite competition from newer blockchain projects. Technical analysis further supports the bullish outlook for Ethereum. Recent trading patterns indicate the formation of a golden cross where the 50-day and 200-day moving averages intersect, typically signaling a bullish trend. Additionally, Ethereum is currently forming a bullish flag pattern which suggests that a breakout could soon occur. If Ethereum can surpass the 50% Fibonacci retracement level at $2,736, it could pave the way for a rally toward $3,052 and potentially even $4,000. As the cryptocurrency market matures, long-term investors may find that Ethereum's established track record combined with ongoing improvements and a solid user base makes it a compelling option. While speculative in nature, the current market dynamics indicate that Ethereum holds considerable potential for those willing to navigate its volatility. As we look ahead, the coming months could be pivotal for Ethereum. With both technological advancements and regulatory clarity set to shape its trajectory. In this ever-changing landscape, keeping a close eye on Ethereum's developments will be crucial for investors considering their next move. In the rapidly evolving landscape of blockchain technology, Solana has emerged as a formidable contender, drawing attention from both crypto enthusiasts and traditional financial institutions. Recent insights from Anthony Scaramucci, the founder of Skybridge Capital, highlight the potential of Solana to reshape the future of financial assets. With an astounding $7 trillion spent annually on transaction verification, Scaramucci argues that Solana's unique capabilities could revolutionize this domain, making it a central player in the global financial ecosystem. Solana's technical performance sets it apart from other blockchain networks like Ethereum and Bitcoin. Its remarkable speed and low transaction costs position it as a viable alternative for tokenizing real-world assets, including stocks and bonds. As Scaramucci aptly puts it, Solana could serve as the main operator for tokenizing real-world assets, paving the way for substantial cost reductions in financial transactions. This transformation could democratize access to financial markets, particularly for unbanked populations, by significantly lowering fees associated with capital raising. According to Scaramucci, the Solana blockchain functions like a railway system for financial transactions, suggesting that its infrastructure could be integral to the future of finance. While he acknowledges that Solana may not immediately eclipse Ethereum, he envisions a future where its efficiency and scalability become indispensable. His forthcoming book, Solana Rising, promises to delve deeper into these themes, drawing on research and interviews with key figures in the Solana ecosystem. However, the path to mainstream adoption is fraught with challenges, as Solana navigates a complex regulatory landscape. Scaramucci emphasizes that institutional adoption is inevitable despite existing hurdles. He references Jamie Dimon, CEO of JP Morgan, who, although cautious, is facilitating greater access to cryptocurrencies for his clients. This shift marks a departure from Ethereum's earlier milestones and suggests a growing openness to blockchain solutions in traditional finance. One notable advancement is the recent launch of the Solana Attestation Service SAS, a decentralized identity protocol aimed at simplifying compliance and enhancing trust across the network. Announced on May 23, the SAS enables applications to validate off-chain data such as Know Your Customer (KYC) checks without directly handling sensitive user information. Nzbezido, country lead for Solana Superteam NG, described SAS as a critical component of Solana's evolving financial infrastructure, essential for bridging the gap between real-world assets and blockchain technology. The importance of such innovations is underscored by partnerships with major financial players. R3. A blockchain infrastructure provider is collaborating with Solana to onboard clients like HSBC, highlighting the growing interest in the network's capabilities for asset tokenization. Furthermore, Kraken's decision to utilize Solana's infrastructure for the international trading of US-listed stocks reinforces its role in integrating blockchain with traditional financial systems. As Solana continues to build a robust technical ecosystem, its appeal to Wall Street executives is palpable. With the ability to handle thousands of transactions per second at minimal cost, Solana is rapidly becoming a serious competitor to Ethereum. This is evident in the diverse applications emerging within its network, from decentralized finance DeFi compliance to programmable identity systems. Looking ahead, the potential for Solana to redefine the financial landscape is significant. If Bitcoin is considered the operational layer for money, Scaramucci posits that Solana could become the foundational layer for real assets. As traditional finance increasingly embraces blockchain technology, the implications for global markets and access to financial services are profound. With ongoing developments and innovations, Solana's trajectory appears poised for substantial growth in the coming years, making it a key player in the future of financial assets.